reasons why I like to trade with the moving average. As much as I like to see a clear chart, I also use the moving averages at times to understand what is happening in the market. If you take a look at this chart, you'll see that this is a 15-minute chart. And if you look at the 1 hour time frame, you'll see that I have a divergence here. I am going to do a video on divergence, on how you can use divergence to your advantage in my next video. But for this video, okay, you are going to see why I like to use moving averages. And then the moving average I'm talking about is the moving average 20, the moving average 200 and 50. I like to use these three. So in place of 20, I change it to 10 when I want to check certain entries and exits. So right now, as you see, to go straight right in what I wanted to explain, okay, so this is the chart. Right now, I'll be using 15 minutes for this illustration. So if you're looking at this chart very well, you will observe that there are three moving averages here. We have the 200, we have the 10, and we have the 50. The green is a 50, okay, and the blue is a 200, and the red is my 10, sometimes 20. I use the same color. I use red for 20 most of the time. So you can see this, and when you see this, normally when price is trending, this is what you're going to have. You're going to have the price in this order. You're going to have the 200 for this is for a sell condition. You're going to have 200 over 50 over 20, or like I said, over 10. Let's use the 20. Okay, so price is actually under this, and this is a good sell trend. This is a good time to sell because price is under these three, 1, 2, 3, and that's what you have here. This is 1, this is 2, and this is 3. That is for a perfect sell condition. Now this is a perfect, let me show you a buy condition. We've been seeing sell conditions there because market was actually trending downwards. So this is a perfect buy condition where the 200 is actually below, because 200 is the biggest moving average. That's the lowest period moving average, followed by the 50, and then followed by the 10, and then price is actually trending on top all of these three put together. Okay, this is a strong buy trend. So now, why do I like to use the moving average? I love to use the moving, even though it is true that moving averages are lagging indicators, okay, but they provide a lot of information in the market, and I'm going to show you that using the most recent data on Boom 1000 index. Now you can see that in this order we don't have the proper trend order, like I had clearly stated that it's supposed to be, the other way around. But in this situation, you have the 200 in the middle. Price came out of a sell trend, broke out. This was a strong trend, a strong breakout, volatility, okay. And then when it went out, what do you observe? You can see that right here, the 50 moving average lagged behind and did not follow this price movement, if you can see. And then it broke out and left the 200 in the middle and got here, and while 50 was lagging, 50 moving average was lagging behind, and then price went ahead with the 10 moving average upward. This is an indication that market is going to its way to pull back to meet 50. There's going to be a range back. It is either going to be a range or a full swing back. It's going to return back. This market informed me that something was going to happen, because for this movement to happen and then the 50 was lagging instead of going with it, it means that price is going to come back to invite 50. Somehow it is either price is going to delay around here, okay, until the 50 moving average comes to break across the 200 as well, and then price will now eventually find its way to retest 50 and then go upward if it really wants to buy. Then if it doesn't happen that way, it means price will have to, you know, come down and meet the 50, retest again and continue coming down. So this scenario of price breaking out of this place and leaving 50 behind, and the 10 moving average following price to this point. In fact, price got to this point and the 10 moving average, the fastest moving average, got to this point and price went ahead of it as well. That was a very good information that this price will be pulling back. So guys, this is the reason why I like to use the moving averages, because it gives a lot of information in the market. Now, if you were trading a naked chart, which is also good to trade, you may not have had that information, okay? This does not mean that when you see this happen, you simply jump in and begin to sell. Like I said, if it is a very strong trend, you will be so disappointed, because if this market got to this point and you just put up a sell immediately, okay, see, being that this is a condition for a sell, you put up a sell immediately, this market could continue to lag, to continue to remain here, and then this one will have to reconcile and begin to come to join, you know, follow the trend eventually, and you would have had many losses, no reasons to lose here. So it is okay to stay with the trend and make sure that you don't go against the trend. I personally don't encourage going to trend, but if you must go against the trend, then you will have to watch my next video that will be explaining that how you can know when the market is going to be reversing, okay, using the moving averages to explain this. So guys, for now, I think I've been able to explain the reason why I like to use the moving averages to trade, because it gives me some information that I need to know when the market is going to be ranging, or the market is going to be pulling back to an extent, or when the market is going to be trending. So right now, I marked this knowing that as price got to that point, it was going to pull back, and of course the bigger time frame is still a sell trend, okay, and so that is why I knew. And then looking at the H1 time frame as well, the same thing happened. Price left without the 50 and the 10, okay, lagging behind. So there was every tendency that price will be pulling back to this market. So I'm gonna be explaining how to look out for such, okay, how to know when market is going to be reversing, especially from the smaller time frame. So you look out for my next video, okay guys. So if you haven't subscribed yet, please subscribe so that you'll get notified when the next video, okay, comes, so that you get to know how to make use of the moving average, just in case you don't know how to use the moving averages to trade, okay. This can really help you. Then this video is for you. So guys, do not forget to hit the subscription button. Please like this video so that the YouTube algorithm will be able to spread, you know, get this video, get this channel across to as many persons that will need this as well, okay guys. Hit the subscription button, like, comment and share. Let me hear your view on this, okay. If you have a second view or something else, you know, you've observed about trading moving averages, please just drop your comments on the comment box. It will be helpful. Okay, thank you guys, and see you in the next video.